Major U.S. stock market indexes, and in particular the Nasdaq 100 and S&P 500, appear to be moving in an upwards fashion for the week. Yet the decline of the Dow Jones 30 for a third week in a row is of some concern. Today we are going to have a look at the fundamentals by analyzing the release of the Fed's interest rate decision later on today and the U.S. core PCE rate on Friday. For a rounder view, we are going to conclude the report with a technical analysis of S&P 500's daily chart. We make a start with the Fed's interest rate decision, which is set to take place during today's American session. This will be the last interest rate decision by the Fed for the year and thus may garner greater attention than usual. Essentially, market participants are eagerly awaiting the Fed's decision, despite the majority of them currently anticipating the bank to cut by 25 basis points, with Fed fund futures currently implying a 96% probability for such a scenario to materialize. Hence, we turn our attention to the bank's accompanying statement, in which should be perceived that the bank may opt to resume its monetary easing cycle. It could aid the U.S. equities markets. On the flip side, should policymakers showcase a hesitancy to cut interest rates with the new year or imply that the bank may remain on hold for a longer period of time, it could weigh on U.S. equities markets. In our view, we would not be surprised to see the bank's accompanying statement imply that the Fed may opt for a more gradual approach to its rate-cutting cycle, which in turn could be perceived as slightly hawkish in nature. Moreover, we would also like to point out the U.S. core PCE rates for November, which are due out on Friday. The core PCE rate on a year-on-year level for November is expected by economists to come in at 2.9%, which would be higher than the prior rate of 2.8%. Such a scenario could imply an acceleration of inflationary pressures in the U.S. economy, which could increase pressure on the Fed to remain on hold for a prolonged period of time in order to gain more confidence that the inflation beast has been tamed. Hence, should the core PCE rate come in as expected or higher, it could imply that the financial conditions surrounding the U.S. economy may remain tight and thus could weigh on the U.S. equities markets. On the other hand, should the core PCE rate come in lower than expected, it may have the opposite effect. In conclusion, the Fed's interest rate decision today may send shockwaves across the U.S. equities markets, with a secondary shock potentially occurring on Friday with the release of the core PCE rate for November. The S&P 500 appears to be moving in a tight range sideways fashion. We opt for a sideways bias for the index, and supporting our case is the index's failure to break above the 6,100 resistance line and the failure to break below the 6,030 support level. Yet we must stress that the Fed's interest rate decision and the release of the core PCE rate on Friday could easily alter the index's direction. Nonetheless, for our sideways bias to continue, we would require the index to remain confined between the 6,030 support level and the 6,100 resistance line. On the flip side, we would immediately abandon our sideways bias in favor of a bullish outlook in the event of a clear break above the 6,100 resistance line, with the next possible target for the bulls being the 6,250 resistance level. Lastly, for a bearish outlook, we would require a break below the 6,030 support level, with the next possible target for the bears being the 5,885 support base. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you a solid trading.